Greetings and welcome to the fourth topic of Principles of Accounting brought to you by Study Space. Now in this topic we will be studying about closing entries and the after products after we've created an income statement and balance sheet. So the first thing we're going to be covering is a worksheet. What is a worksheet? A worksheet is basically a separate format of accounting statements, which makes it easier for us to be able to identify and compare different accounting books. So as we can see here, first we have our trial balance, then we have our adjustments into these trial balance, and we can see which product had a particular adjustment in it. For example, our supplies were dropped by 1500 because that came to our expense and that was reduced out of our assets, leaving our supplies to be 1000. This shows supplies of 1000 on our balance sheet, and we can also see that these supplies were then an expense here as marked as 1500 and then showed in the income statement as 1500. So in a worksheet you can basically compare all your statements and changes within them. This allows us to see the initial statement, which was the trial balance, down to the extreme last product, which would be our balance sheet, and to be able to evaluate all the changes that took place in between of the trial balance and the balance sheet. While the worksheet is not commonly used, it is still a very vitally important part of accounting and is an extremely simple process where all the adjustments and the entries are just simply shown in such a format and are then deciphered for and shown by explicitly outlining the adjustments in the different factors and different parts of the worksheet. Moving on, we will be looking at the closing entries. Now, what closing entries basically are, there are 4 particular closing entries. When we come to our accounts, and once we have calculated the net income out of the income statement, we then provide this net income into our balance sheet. So the 4 closing entries would be as follows. First, we tabulate all our revenues and we debit our revenues and we credit our income statement accordingly to close off our revenue accounts, which are our temporary accounts. Then secondly, we tabulate all our expenses by debiting our income summary and crediting our expenses, thus closing the expense account. Thirdly, what we do is we take the net income from our income summary account if positive, we debit our income summary and we credit our capital account by that difference. This is the scenario when profit. In case of a loss, the entry would be reversed by crediting the income summary and debiting the capital account, reducing the capital account. In the fourth entry, we would debit our capital account and credit our drawings closing them off so that there are no drawings left, and thus all our temporary accounts are closed and only our permanent accounts are left. This is done so that we can have a fair view of where the company stands in order to show the accurate image of the company. So the accounting statement or the accounting equation that changes after the incorporation and after the operations of a business is such that assets are equal to liabilities plus capital, wherein capital is equal to balance brought down, or the balance initially, minus drawings plus profit would give us the new capital. After we have tabulated and enter the closing entries, we then create a post closing trial balance. The only difference between this trial balance and another trial balance is that in this trial balance there are no expense accounts, no income accounts, no drawings, and finally all profit and loss has been accounted for. So a post closing trial balance looks exactly like an adjusted trial balance or a normal trial balance. The only differences are the ones that have been mentioned here, and the formats and everything else is exactly the same. The only reason we create a post-closing trial balance is to show balances after accounting for profit and loss and closing temporary accounts. Now the last thing in this chapter will be the complete accounting cycle. This is going to be a summary of the complete accounting cycle, and this diagram is going to help you to show exactly what we have studied in the accounting cycle throughout these video tutorials. As you can see on my left, the accounting cycle diagram is shown. In this diagram, the first entry, as we had studied, was analyze, to tell whether any entry, what would be debited and credited, or whether any transaction has taken place. Then we have journalize, entering the transaction. Thirdly, we would post it to the ledger. Fourth being preparing a trial balance. Then we add adjustments. Sixth would be our adjusted trial balance. And so on. We create our financial statements in our 7th step. In the 8th step, we would generalize the closing entries. And lastly, the post-closing trial balance. And these steps would be repeated every year throughout the books of accounting. So that's it for this chapter. I hope you guys had a good time learning. We're going to start with the new chapter in our next video. And for any other questions or any other practice questions, you can just refer to the book. Thank you.